Harsha Padhya, Head of Equities at Kotak AMC, joins us live. Harsha, good morning. Thank you for joining us. Harsha, of late, even though the news flow has not been all that negative, on a daily basis we are experiencing deadly volatility, too much of back and forth action, and a virtual bloodbath in mid and small cap stocks. Why? What is happening, and do you think in the near term some more pain is still here to stay?
I think this is more or less in line with the kind of volatility that we expected prior to an event like budget. Although budget has become more of a statement of account rather than a reform or policy initiatives in that sense, but I think market participants do expect some amount of volatility prior to such events, and also because of the fact that most of the global markets are close to their highs, the volatility has increased. Coupled with that, we have seen some of the leveraged positions in the mid-cap segment in India particularly have got hit because of pledging issues or margin calls, etc. So I think in all, the volatility has increased over the last few weeks, and we expect it to reduce a bit going forward as there are no big events, and also the earnings season has come to an end. I think in terms of local events, there is only RBI policy which is there in the middle of this month. Apart from that, it seems to be an event-free month in that sense.
Harsha, you just highlighted the mid-cap pain. It's now, trending towards even names like some of the renowned PSUs, the likes of an NHPC, or for that matter, companies like an IFCI as well. Do you think this could be just the start of the mid-cap pain and there's lots more weakness in store?
Well, it's a bit surprising that it's going into stocks such as the ones that you mentioned, because usually these are not the ones which are which have any speculative interest in that sense. But somehow I think there were some leverage positions that were built into even these stocks, which is a bit of a cause for concern. But by and large, I think the mid-cap segment has corrected a lot since the beginning of the year. It has corrected almost double that of the large cap index, and we believe that most of the pain is already out of the way. And also we are looking at some of the mid-caps which are available at attractive valuations now to build positions into those mid-caps.
You have a large exposure to IT. In fact, a marginal overweight stands there. Most of the IT stocks have done rather well. Do you think at the current juncture it makes little sense to own IT stocks? Because the environment is extremely challenging. Excepting TCS, Wipro, Infosys, HCL Tech, all of them have gone on record and have indicated that in the near term there are multiple challenges.
I agree, Nikunj. We were also concerned about the business environment for IT companies, but we felt that it's a kind of a defensive positioning that we can have if you have a little bit of IT in the portfolio, and with that in mind we increased a little bit into the sector, which has worked out well. While business environment continues to be challenging, I think there are stock specific opportunities in the sector, and that's what we are trying to play. Even now, except for one or two portfolios of ours, most of our portfolios are still underweight IT, and only few portfolios which were overweight have benefited because of this move in the last 2 months or so.
So which are the names that you're positive on when it comes to IT, and are those names now a hold, or would you still initiate buy into those names?
No, we are not making fresh purchases into IT sector anymore. We are currently have reasonable position in large cap IT companies, and we continue with that approach.
Right. Harsha, the earning trigger is behind us. Budget as a policy event is over. So what really could be the next big trigger for Indian markets? I'm trying to search and I don't see anything apart from RBI action.
You are right. Apart from RBI action, we don't see too many events in the horizon. I think largely it will be driven by global events and global developments, and I think going into April again the earnings season will start, but until then I think it's only RBI policy for local investors.
Do you think markets are pricing in a 25 bps rate cut on 19th March, or if we get a rate cut on 19th March, that will be a big surprise, and in the near term then we could see a rally in rate sensitives?
I don't think it will be a surprise. Looking at the kind of GDP numbers that have come out recently, and also the fact that inflation has been softening quite a bit, I think one can reasonably expect that there can be some rate action in March. But I don't know whether the market has fully discounted this or not. In the short term, it's very difficult to predict how the markets would behave. But looking at the way banking stocks have performed over the last few weeks, seems like possible rate action has not been built into the prices yet.
In terms of earnings though, Harsha, where do you see now growth trickling in come next quarter?
For next year, full year, we believe our earnings should be around 11 to 12%, probably a little lower now because of increase in corporate surcharge. But I think if at all, if there is any higher growth, that will be back-ended and not front-ended. So to that extent, I think next few quarters should be in the high single digits in terms of earnings growth.
Harsha, we like it, we don't like it. Everyone on the street is calling mutual funds as the villain. Foreign institutional investors are buying, you guys are selling. When will you guys stop selling?
No, I think at least I can speak about Kotak Mutual Fund. I think fortunately for us, the flows have turned positive in the last few months, and we have not been selling in the market. I think the pain that the mutual fund industry went through has now spread to probably insurance industry, and that's where most of the selling is coming from on the domestic side. And as you said, FIS continues to be buyers in the market. Overall, there has been a net buying by institutions, I guess.
That's an important acknowledgement. Are you making a case that for mutual fund industry, the trend has reversed?
No, I'm just extrapolating what I've seen at our own inflows, etc. There seems to be some amount of net inflows that are there on the equity side. If that's a trend that's there in the entire industry, then I think we are heading for better times for the industry.
Harsha, good chatting with you. Appreciate you taking the time out and joining us.